Namaskar. Today we are continuing with the GFR 2017 rule number 16 onwards. Up to 15 we have already seen. Some portion of 21 or something, that is about the canons of standards of financial propriety also been seen already. Now we will see the rule number 16 about fines. Normally revenue department, police department, they have the power to issue fine also, compounding fee, fine and other things. So similar to that, any revenue related assessment, there is a possibility of imposing fine, there is a possibility of imposing compounding fee. So all those people having the power to impose or realize a fine shall ensure that money is realized, duly checked and deposited into the treasury or the bank as the case may be. So it is the responsibility of the assessing officer, the person responsible to do the work. Every aspect of the fine they have to check thoroughly. There is no scope for missing out anything. This is what this rule implies. And the second rule, part 2 of rule 16 is, the authority having a power to refund fine shall ensure that the refunds are checked and no double refunds are made. So, for whatever reason, with the approval of competent authority, the fine has been reduced or exempted, or court has issued orders to refund the fine, something like that, whatever reason. When you refund the fine, you have to check when the fine was collected, how it was remitted, everything has to be checked. The reason is, and if it was already paid, repaid, everything we have to check. So the file should be properly maintained and the file should tell clearly whether this is refunded or not. If it is refunded, under what ground. And not only that, when there is a question of refund of anything, they have to first check whether that such funds have come into government account, under which salon, when, and which head it is booked. Everything they have to check. Otherwise, suppose there is a possibility due to mistaken identity, people might demand for refund, etc., and without their paying also. So the government says, when there is a refund due, you check the original receipt, when it was received, and how it is remitted, and what are the details, what is the current status, any refund was affected in between. So all these things can be done only when you maintain file clearly. Every action should be recorded in the file. Any correspondence issued or any decision taken internally or any letters received, everything have to be recorded in the file, in the noting portion, and relevant correspondence portion must be there. With proper, wherever registers are prescribed, necessary entry has to be made then and there. Only then such case of verification is possible. Otherwise, there is a possibility that it was already refunded some year ago or 1 or 2 years ago, again it is refunded by mistake. So this is the problem with the improper maintenance of records. So when you go for refund, you need to check thoroughly every aspect. That is aspect 1, when it was, whether it was actually received, and in between, up to today, from the date it is received, in between any payment is made, refund is made, everything they have to check. And once refund is made, you make an entry in that, giving reference to original receipt and refund, and what is the net receipt to the government, or close with no receipt to the government, whatever it is. That way, if you maintain, you will be safe from this rule. Miscellaneous remand. Normally, revenue, etc., the revenue authorities, the authorities who are responsible to check every stage. That is forecast, assessment, and then issue of notice, realization, remittance to government, or all those things. But some miscellaneous receipt, something from the received from state government, receivable from state government, and normally they are not falling under the normal revenue. These things have to be verified by accounts officer also. They will have to keep a record. Suppose any order is issued or any communication has been received, a copy will be marked to accounts officer also, so that any such remittance they will also keep a watch. This is for as per the rule number 17. Now, remission of revenue. An authority competent is convinced to give relief. Yes, you need to have competent authorities approval. Without that, you can't do. Simple, as simple as that. A claim to revenue shall not be remitted or abandoned, save with the sanction of the competent authority. So normally each department will give who is, now the department head will have full power, and that is delegated down the line up to the assessing officer level. So any revenue claim, you want to reduce it, you give some relief. Yes, unless you have power. If you are competent, yes, you can give the reason and approve it. Or else you have to take approval of the competent authority with whom such power is vested. Only then you can think of remission of revenue or even abandoning of revenue. Whatever reason, the reason you have to give. Government always doesn't say that you have to collect come what may. No, it is only practicability, reasonability. There are many things. So there may be a case where government has to forego the revenue. So, but the reason has to be recorded. Under what circumstances the abandonment of revenue has been resorted to. That is government's revenue. We say, okay, leave it. It is something like write-off of. It's not write-off of loss. The dues are written off. So this has to be done only with approval of competent authority. Now rule number 19.1. Head of the department shall submit annually on the 1st of June to the audit officer and accounts officer statement showing remission of revenue or abandonment of claims to revenue sanctioned during the preceding year by the competent authorities of more than 1,000 rupees in each case. Suppose wherever the remission is more than 1,000 rupees, yes, they have to. No, it doesn't mean that remission of 1,000 rupees can be ignored. That will be, file will be there. Audit has the right to check that file also. But more than 1,000 rupees, there should be a statement sent to audit office and accounts office. So when they audit, they will thoroughly check under circumstances under which this was foregone, this was abandoned. With approval of course, competent authority can approve, but audit has the authority to check whether it is done correctly as per the rule. Everything they will check. So the self-certified statement kind of things have to be submitted to the audit office every year in the month of June for the preceding years. Okay, now that statement will contain only rupees more than 1,000 rupees of revenue foregone. That doesn't mean anything withdrawn or anything remitted or anything abandoned of value within 1,000 rupees can be simply ignored. No, you have to keep file completely. Audit would like to see that also. It is their right to check. The statement anyway they will cross check, and beyond that they will check lesser value also. So everything should be in the file. And when you submit the statement, a brief explanation of circumstances leading to the remission. Under what circumstance this was remitted or abandoned have to be given in the statement itself. This helps the audit department to check that things have been done just and fair enough and as per the rule. This is very important. So now we'll see remaining, there are many such things, one by one we are seeing. Most of the people might be interested in purchase side. I will be discussing under separate chapter, but in an order that whatever GFR says, I am only discussing in a kind of orderly manner. We will see in the next video. Thank you.